Welcome to Hedge and Haven, where we decode how the rich really operate. What if I told you that some billionaires like Peter Thiel have legally paid $0 in taxes on fortunes worth billions? Sounds impossible, right? Yet it's entirely true and 100% legal. In this video, we dive into the hidden playbook of the ultra-wealthy, how elite billionaires structure their wealth using offshore trusts, domestic shell companies, and dynasty trusts to build generational empires completely shielded from taxation. This is not conspiracy, it's strategy. Stick with us as we uncover the mechanics of the Cook Islands Trusts, Delaware and Wyoming LLCs, and the dynasty trust loopholes that allow billionaires to pass on fortunes tax-free. And yes, we'll walk through Peter Thiel's actual reported Roth IRA strategy, how hedge funds exploit legal gray zones, and why most of this is out of reach for the average investor. Peter Thiel, co-founder of PayPal and early Facebook investor, turned heads when reports revealed he legally grew a Roth IRA worth $2,000 into over $5 billion, and it remains 100% tax-free. Here's how he did it. He seeded his Roth IRA with undervalued startup shares at fractions of a penny. As these startups, including PayPal, exploded in value, so did his IRA. But because Roth IRAs are shielded from capital gains and income taxes, the growth was tax-exempt. This isn't just smart investing. It's a masterclass in strategic legal arbitrage. Thiel exploited valuation loopholes, privatized startup shares before the public market could see them, and wrapped them inside a government-approved tax shelter. But that's just the beginning. While most people think of offshore tax havens as shady or illegal, the Cook Islands Trust is 100% legal and one of the most powerful financial tools the wealthy use to hide and protect assets. Located thousands of miles from U.S. jurisdiction, Cook Islands Trusts are nearly lawsuit-proof. Even if a U.S. court demands assets, Cook Islands law simply ignores the ruling, but it gets even better. By placing assets, stocks, crypto, real estate into these offshore trusts, billionaires shield them from taxation, lawsuits, creditors, and even ex-spouses. In fact, many hedge fund managers and tech billionaires route income to these trusts and reinvest it tax-free. Combined with secrecy laws, these trusts form a fortress around wealth that not even the IRS can penetrate easily. Back on U.S. soil, Delaware and Wyoming offer something surprisingly similar: complete anonymity. Setting up an LLC in Delaware or Wyoming requires no disclosure of the true owner. These states have become tax shelters for domestic billionaires who funnel income through multiple shell companies to minimize or defer taxes. Here's how it works. A billionaire creates a Delaware LLC that owns their intellectual property. Then they create a Wyoming LLC that licenses this IP, charging fees back and forth, on paper. The result? Artificial expenses that reduce taxable income, while the real value is transferred quietly between entities. This is how real estate tycoons, hedge funds, and even influencers keep their tax bills low. It's all about owning nothing, but controlling everything through layers of legal wrappers. Now comes the true endgame: dynasty trusts. These are designed to pass down wealth to children, grandchildren, and great-grandchildren without ever paying estate or inheritance tax. In some states like South Dakota and Nevada, these trusts can last forever. Billionaires set up these trusts with carefully drafted legal language that keeps the principal untouched while funneling tax-free income to future generations. The trust owns assets, collects dividends, appreciates in value, and the government doesn't touch a cent. In fact, hedge fund managers and Silicon Valley insiders are increasingly turning to dynasty trusts to immortalize their wealth. These legal structures ensure that not only does the founder avoid taxes, but so do all their heirs for potentially centuries. So why aren't these strategies shut down? Because they're legal, and often supported by lawmakers who benefit from the same loopholes. But the cost is massive. While billionaires pay virtually nothing, the tax burden shifts to the middle class. Schools, infrastructure, and social services are funded by those without armies of lawyers and offshore advisors. Critics argue this creates a two-tiered tax system, one for the wealthy elite and one for everyone else. Meanwhile, advocates claim they're just using the tools the system provides. Whether you see it as smart planning or systemic injustice, one thing is clear: The rules are written by and for the rich. Most people will never use a Cook Islands trust or set up a tax-free dynasty trust. But understanding how the wealthy move, structure, and protect capital can inspire smarter investing and tax planning. Talk to financial advisors, explore legal tax shelters, learn from the playbook, but don't expect to play on the same field unless you build the same leverage. So next time you hear that a billionaire paid $0 in taxes, don't get angry, get informed. Because knowledge is the first step to protecting your own future. And that's what Hedge and Haven is all about.